The $1,000,000 question, is this a bear market rally or is this the start of another bull market? I do want to warn you guys, when stocks do this, 80% of the time they do it during recessionary times. So on Friday, the S&P 500 posts the longest winning streak in 20 years as Trump and China show some willingness to bend on trade. Now, what I do want to warn you guys is right now, the S&P 500, 9 consecutive higher closes in a row. And a lot of people are going to say, oh, you know what? The market has to go lower. Well, does it? We're going to talk about that here in a few moments. I also want to make you guys well aware of, if you guys know who Tom DeMark is, on Monday, we're going to be forming a potential 9 count. So we're going to see, is the 9 count going to ring in? We have exhaustion in the market. We also have this larger ABC pattern on the way up, which we were almost able to make it up to on Friday at 574.81. Now, if we look at the average bear market rally, the average bear market rally going all the way back to 1929 is essentially 17.2%. If we measure right down here from the low all the way up here to the high on Friday, we can see that we have rallied up 17.93%. Now, the average time of that rally is about 39 trading days. If I go ahead and measure, you can see right now we've had approximately 18 trading bars. So in terms of percentage gain, yes, we've met the average percentage gain. However, we have not met the average duration of days just yet. Now, there's another way that we can look at this too. If you're looking at, bear market rallies, we can measure from this last swing here right up to the high, and we can see we've rallied up roughly 11.87%. And if you use that last swing right there, we can see the 17% is going to be all the way up here, just above the 127 extension, which would bring us in the ballpark of making new all-time highs in the stock market. Now, if we come over and look at what Market Watch has to say, the S&P 500 is heading for its longest winning streak in more than 20 years. That doesn't mean the worst is over for stocks. And I want to scroll this down real quick because a lot of people are going to say 9 consecutive up days, the market has to go lower. But Market Watch has a pretty good little chart right over here. And we can see every time in history going back to 1954, when we've had 9 or more consecutive days in a row. And the longest win streak that we had in a row was actually back during 1971. However, I want to look at the performance 1 month later. We can actually see that 55.6% of the time, we've actually been higher. But if you look at the average return, it's only been another 0.2%. So could we start to go into a little bit of a consolidation? Keep in mind, with all the tariff news going on, if a deal is struck, then we're probably going to see another large candle up like this. And what would really be funny is, will it be a large candle that takes us all the way back up to new all-time highs? But I also want to come over here and look. Notice 6 months later, we have been up 63% of the time. And if you look at 3 months later, we have been up 66.7% of the time after having at least a 9 count. Then if we come over and look at what David had to say, we can see, I want you guys to pay very close attention. Whenever the S&P 500 has managed to rise 9 consecutive days in a row, 80% of the time, this dynamic has happened in recessionary environments. And one thing to note, it also happened before the October 1987 stock market crash. Now, come over and look at the fear and greed index real quick. We're sitting at 43. Earlier in the week, we almost made it to 50 in the neutral territory. Now we've been smacked back down a little bit. Then we come over and look at the most recent investor sentiment survey. Even with all the consecutive days up we've had in the market, notice the amount of bulls in the market have actually dropped lower. Comes in at 20.9. The previous week was 21.9. And also look, the bears are starting to jump back on the bandwagon once again. 59.3% of participants believe the market will be lower in the next 6 months. And even if we do continue to rally from here, I do think late summer going into the fall, it's going to be absolutely horrible out here for stocks. Now, I want to share with you guys this other stat brought to us by Wayne. And basically what he went on the show is during a 21-day rolling period where we had a 10% more correction and a 10% bounce back or more, look at the returns that we've seen. 1 month later, we've been up 15 times, down 5. And there's only been 20 of these times that have happened in the past. 3 months later, we've been up 13 times, down 7. Then we look at 6 months later, been up 16 times, down 4. But then again, 12 months later, similar to the stat I showed you guys a few moments ago, we've been up 18 times and only down 2. So yes, the market could be turbulent right now, but looking at this stat moving forward, in the longer term, it does look like the market will still be higher unless this stat gets busted. Now, as we come over and look at how the market performed on Friday, look at it, look at the advanced initiatives versus declining. We had 76.2% advancing on the day. Then as we come over and look at the sectors on Friday, every single sector was in the green. And then we scroll down and look at the 1 week performance. Only one sector was in the green last week. That was energy. Crude oil absolutely having a hard time out there. Technology by far outpacing everything else to the upside. So speaking of energy real quick, let's come over and take a look at crude oil real quick. Here's a zone that we drew out. Basically looking right over here from the candle bodies down here to the candle wick. It's going to be imperative that this level holds. And again, this is another recessionary warning sign that we need to pay attention to. In recessions, typically the stock market does not do well. And during recessions, we also see crude oil prices going lower. So we have a dreaded H pattern. Is it going to break, and are we about to go substantially lower? This is going to be critical. If crude oil is going to start to bounce up, it needs to hold above the bottom of this wick right over here, somewhere around 55.09. Now, if it just wicks it and gets back up, we'll give it the benefit of the doubt. But if it really breaks and closes below it, watch out. This is going to be another troubling sign up ahead. Now, I want to make you guys aware of two amazing offers out there. My Funded Futures, 50% off any plan for new users, and Take Profit Trader, 30% off all evaluation accounts and no activation fee. If you want to take advantage of these offers, use the links in the description box down below. Now, as we come over and look at Amazon stock, we see Amazon has come off the highs substantially. Now it's starting to have a little bit of a consolidation down here. Now, I got to ask myself this question. Is Jeff Bezos telling us something without telling us something? Jeff Bezos disclosed his plan to sell up to $4.8 billion in Amazon stock. So if he thinks the stock is going higher, why would he be planning on the selling? Does he know that tariffs are not about to be resolved in the very near future? Let me know your thoughts in the comment section down below. Now, here's going to be a sad moment out here. And it's going to be the fact that Warren Buffett is stepping down as a CEO at the end of the year. Why he hoards a record cash of $348 billion. Warren Buffett has been known to be one of the best investors of our time. And the fact that he's hoarding cash should be a warning sign for us. Now, as we come over and look at the dollar index, we see on Friday, gold actually went below the low on Thursday, then closed in the upper third of the range, kind of a hammerish looking candle. MACD indicator still looks strong. And then we come over and look at the precious metal gold. Gold still has not made it all the way down here, filling the gap. I think that's where gold's headed, right around 3178.6. If we break that, are we then going to go ahead and come all the way back down towards the swing low? We can see the MACD indicator on the daily chart. It does have a bearish cross at this moment. Then we jump over and look at the volatility index. The VIX continues to melt lower. On Friday, the VIX was down 7.88%. And we can see at the end of the day, the VIX started to spike up here just a bit. So are we going to get a gap up or gap down come Monday? Now, as we come over real quick and we look at the Dow Jones versus the transportation index, on the bottom, we have the transportation index. We can see it's trying to climb up. But if we look at it in comparison to the Dow, to me, it does not look like it's trying to jump up nearly at the pace of the Dow. And basically, before the market sold off, we can see the transportation index gave us a huge divergence warning signal out here. Then we come over and look at the bond yields, the 10 versus the 2 year. We can see the spread keeps coming a little bit lower. Now, this is actually good. When the yield curve is steepening, watch out. That's when bad things happen in the stock market. And that's exactly what we've been seeing transpire so far this year. Then we come over and look at HYG versus SPY. HYG in the bottom of the screen, that's going to be high yield bonds. Now, we're going to see as the S&P continues to make new highs, why did the bonds start to pull back here just a bit? Is this another warning sign that we need to pay attention to? We already have 9 consecutive up days in a row. And on Monday, we can have that 9 count starting to form. Now, if we come over and look at the EMAs real quick, we can see we have the 200 period EMA in red. Are we going to basically come up here, kiss it, which is right near that 100% A to B equals C to D pattern, and then start to pull right back down? If that's going to be the case, watch out. We're probably going to go a substantially lower. MACD indicator on the daily chart, though, I do want to warn you guys, does look extremely strong, at least at this moment. We look over here on the 4-hour chart. MACD indicator still crossing to the upside, still grinding on up, right around 45-degree angle. The separation is not nearly as good as it was over here, but nonetheless, I don't see any warning signs just yet. Then on the 30-minute chart, you can see on Friday, we got that bearish cross of the MACD indicator, and we've had that push up. On Friday, we had another gap up. So now we have another instance where we have 2 days consecutive back-to-back gaps that have not been filled. And we scroll this chart back, we still have some large gaping gaps over here, which did not fill. We had gap number 1, gap number 2, and the market just continued to rally on up. If we do get a tariff deal with China, yes, I think the market's absolutely going to come unglued. But in the meantime, I do think a little bit of a pullback is warranted in the near future. If we simply grab a Fibonacci retracement tool and we measure right down here from this recent swing low up here to the swing high. Now, if we make a new high on Monday, we'll have to adjust this Fibonacci level. But notice where the 38% level comes in. Right here at 554. That would be a minor retracement and what could still be a much larger move on the way back up. So if we start to pull back, let's look at some of these key fib levels, and we know the S&P loves to retrace at the 50% level. Now that large gaping gap that we have down here, we can see the 61.8 level comes right in the middle of that gap, and we'll see, do we start to try to work back in towards that area? Jumping over and look at the futures markets real quick. What do we got going on over here? On the 4-hour chart, we completed this A to B equals C to D pattern on Friday. If we missed it, we might have missed it by a tick or two. However, I do want to caution you guys because we do have a much larger ABC pattern, which still has not been hit just yet. Let me draw that out for you. That would be the A to B leg. The B to C leg would be the corrective leg, and that completes somewhere up here around 57.80. Now, we do have another untested point of control up here as well at 58.15.5. However, do we start to pull back a little bit first? I'm going to clear these charts off because as we start looking at the weekly profiles, look at what we did this week. We're closing outside of value area high. Now, value area high on the weekly will come in at 5648.00. Now, the fact that we close outside of value makes it highly probable that either this week or next week, we're likely going to come back and visit that level. And if we start breaking below value area high, guess what? We kind of have this large minus development area right up in here where the market will probably spend a little bit of time, build out the profile a little bit, and then we'll see if we can make our way all the way down towards the weekly point of control at 55.49.5. Then we have value area low at 54.93.50. But I do want to caution you guys, just because we're closing outside of value, just because we've had 9 consecutive up days in a row, does not mean the market's just simply going to fall off a cliff and we're going to start going lower substantially next week. Then we come over and start looking at the daily profiles, and you can see that P point was hit on Friday. We talked about that during the live stream on Thursday. If you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. On Monday, we're going to be announcing the winner for the Take Profit Trader account giveaway. If you guys were on the stream on Friday, then you know what requirements need to be met in order to qualify for that giveaway. Now, as we look at the daily profile, I want you guys to pay attention to the shape. This is going to be a P as in Paul shaped profile, and this is normally indicative of a short covering rally. And basically the shorts have been getting squeezed for about 9 days at this point. We can see that on Friday, we took out another untested point of control in the daily at 57.17 and we have value area high coming in at 57.20.5. We have the point of control coming in at 57.09.5 with value area low being 56.89.5. Now, something I would prefer to see would be on Sunday night, we go ahead, we gap up higher, we get above value area high, and then we start coming back down. From that point on, I will target that point of control. I will target value area low. And the rule behind the P-shaped profile is if we break value area low, we're likely going to explore the lower third of the range. And look what we have at the very bottom. We kind of have a huge minus development area. So I'd want to target right over here at the top of this candle body and kind of near this swing point right over here, somewhere in the ballpark of 56.34. If we break below that and we start going below the low, let's not forget, we still have an untested point of control below us at 55.34. Now, I do want to make you guys well aware we are in the midst of earnings season. We have a lot of earnings coming out next week. We have AMD, SMCI, we have ARM, we have Uber, we have Disney, just to name a few. And then we come over and look at the expected big movers out there. Palantir expected to move plus or minus 15% on Monday, then Lyft on Thursday, plus or minus 16%. Now, as we come over and look at Palantir, if we look right over to the left, we're right near a prior swing high. Now, is this going to be a breakout point? We see that it's starting to get a way overextended, and we'll see, will earnings be the excuse to push higher or start to get that pullback on the way back down? Keep in mind, Palantir still has this large gaping gap down here at about 94.26. However, next week, it's not just going to be about earnings, because as we come over and look at the economic calendar real quick, what do we have on deck? Basically, on Monday, we have ISM services PMI coming out. On Tuesday, we have no major economic news. But then on Wednesday, we get the FOMC statement. Jay Powell is going to take the podium. Is he going to come out dovish or is he going to come out a bit hawkish? Keep in mind, that's only 3 days away at the time of recording this video. If we look at what the market is pricing in, we can see the market is priced in that the Fed is going to do nothing. Now, previously, we've been seeing the Fed was going to cut rates in June. Now, they have pared that back to where they don't think the next rate cut is actually going to happen until July. Now, it will be funny if we get 0 rate cuts all year long. And keep in mind, as the economy starts to slow down, one thing that will do is that will curb the inflation in the economy. Now, as we come over, look at the QQQs real quick. Notice we have a VWAP right up here from all-time highs. We also have an anchor VWAP right down here from the lows. And you can clearly see we are above both those VWAPs. We also have this A to B equals C to D pattern, which completes at about 493.39. And on Friday, we made it as high as 490.91. So we are not that far away. Another little pop on Monday. Maybe we'll get there. Now, I'm kind of curious. Where are we in terms of the 9 count? You can see on Friday, we have bar number 8. So on Monday, we could get a 9 count, which signals exhaustion in the market. Now, exhaustion doesn't mean we just simply roll over. It could be we consolidate and then work off that momentum and then start to head back up. Or maybe we just simply bust that 9 count altogether. Now, as we come over, look at the SMAs real quick. The red line is the 200 period SMA. You can see we came right up there. We kissed it. Are we going to start to pull back from that area? That would make logical sense. Look at the MACD indicator. It looks extremely strong at this moment. Then we come over and look at the weekly chart real quick. Let's go ahead and grab a fib from all-time highs right down here towards the low. And you can see we're right at the 61.8 fib level. Are we going to go up a little bit higher, maybe coming right back towards this swing point right here where we broke down from, and we come back to repair that area somewhere around 499.79 up here to about 501.21. Diving down, looking at the 4-hour chart, we see the MACD indicator. So that's a good separation of the 2 lines, but I do think it's going to start to weaken in the very near future. On the 30-minute chart, you can see we had that gap up on Friday. We had the gap on Thursday. So we had 2 consecutive up gaps in a row. And if we scroll back, just like we had with the S&P, we had 2 consecutive gaps, which we still have not come back and try to fill those gaps at this moment. So are we going to start to pull back? We look at the profile shape. I would kind of classify Friday's profile shape as a P as in Paul, which means we break value area low. We're likely going to explore the lower third of the range, somewhere in the ballpark of 486.02. We go below that, then I'd want to hold targets out towards the gap fill. Then maybe a super runner all the way down from the gap to be filled from the gap on Thursday as well. Now, as we come over and look at the futures markets real quick, we can see this week we are able to take out a point of control at 20,080. If we zoom this out here just a bit though, we do have the composite point of control right up here about 20,621. So we're going to see, are we going to head up towards that area? Looking at the weekly profile though, one of the areas that has my attention other than the value areas and point of controls would be this large minus development area. That's going to be anywhere from the ballpark of 19,850 down here to about 19,699. Now notice, similar to what we talked about with the S&P, we are closing above value area high, which comes in 19,927.75. So since we close outside of value, highly probable that this week or next week, we come back and we revisit that area. If we do break below value area high, I want to turn my attention towards the point of control at 19,509.75. Then below that, all the way down towards the low, which would be value area low at about 19,105.75. Now, I don't know where we make it all the way down to value area low, but I do think there's a good shot we hit value area high and maybe even spend a little bit of time in this minus development area. One thing to note, the first time we come into the minus development area, a lot of times we'll do something like this. We'll come in and then boom, bounce right back out. Or we'll come into the minus development area and then we'll just simply chop up and down all through that area. Come over, look at the daily profiles on the 30-minute chart. Notice value area high is up here about 20,263.5. We closed right near the point of control at 20,192. And then value area low is going to be 20,088. I'm going to classify this as a P as in Paul shaped profile. And one of the areas, if we do start breaking value area low, that has my attention would be this minus development area right here on the profile, which comes in a ballpark of 19,098. Now, I would prefer to see Sunday night, we go ahead and we push above value area high from Friday, but then we simply turn and we come down, we test the point of control, maybe even value area low, and then we start working our way down towards that area. Anything below that area, I'd want to then target this high volume node somewhere in the ballpark of 19,930. Now, if we break value area high and we stay above it off the daily chart, I want to refer back over to the weekly chart and say, okay, can we continue to push back up towards this next high volume area right here on the profile. That'll be anywhere from 20,320 to about 20,386. Now, if you guys like to learn 2 ways to pass prop firm challenges, make sure to watch this video right here.